Hi everyone, Elaine Low here at Investors Business Daily with a special retail spotlight ahead of Nike's third quarter report after the close Tuesday. While the sportswear brand is still number one both at home and abroad, it's expected to post its first profit decline in 4.5 years. Now that comes amid a choppy, broader retail environment that's seen the bankruptcies of Sports Authority and several other sporting goods retailers. But another looming issue for the swoosh is global number 2 Adidas, which issued some very well-received guidance on its most recent earnings call. Just last week, management said it's targeting revenue of $5.3 billion in North America in 2020. That's still a fraction of Nike's target for $20 billion in the region in the same time frame. But for Adidas, that would mark a 47% bump from its 2016 numbers. Now, Adidas CEO Kasper Rorsted said that he considers the brand in catch-up mode in the U.S. and recently told me that that's the only market where the company is, quote, paying the price for the past.
Because I think it's important to understand we've been in the U.S. for many years, but we've not executed appropriately in the U.S. And that has given room for a Nike to grow and also for an Under Armour. Under Armour, as you know, we're 4.5 times bigger than Under Armour globally. So there's a substantial difference between us and Under Armour globally. And it's only in the last 2 to 3 years that we've really come back. And of course, we can't make good of 10 years where we were inconsistent in our performance, sometimes good, sometimes not so good. So while we're happy with the number 2 spot, as I said, we're happy with the progress, we're actually not happy with where we are overall as a company.
And as retailers contend with the forces of Amazon and fast fashion, all of the major athletic brands are focusing on manufacturing innovations. Here's what Adidas North America brand president Mark King told me about its speed factory as the company focuses on getting product to market faster.
Really what we're in pursuit of is the consumer changes so fast, and we have to have the ability to be able to recognize styles, trends, be able to create products and get them in the market as fast as possible. We think that by 2020, 50% of our production will be on what we call speed production, and if we can get there, and that's really our goal, we really think that will be one of the biggest competitive advantages we have against any competitor.
So far, the company's new strategy appears to be serving them well. Shares of Adidas popped 62% in 2016, while Nike shares tumbled 19%, making it the worst performer on the Dow. Though so far, that stock is up about 14% so far in 2017. If Adidas hits all of its marks by 2020, NPD Group's analyst Matt Powell tweeted that would give them low teens market share, its highest U.S. share of the pie in decades. But that all doesn't necessarily spell bad momentum for Nike. Morgan Stanley said that as active apparel remains trendy, signs are pointing to accelerating industry growth rates and that a beat from Nike would confirm strength in the global athletic wear industry. For Investors Business Daily, I'm Elaine Low.